it on as well. So thank you guys once again.
All right, so I'm just getting ready to share my screen as we roll into our presentation for today. Perfect. So I just want to say again, thank you for everyone for showing up today. We have a special topic for the Juneteenth holiday coming up on Monday. So we just wanted to make sure we covered this topic and talked about some strategies for closing the wealth gap. So we'll go ahead and jump right in and get started, tell you a little bit about our team, and we'll get it rolling from there.
Yes, everybody, my name is Jason Matthews. I am President and CEO of Matthews Financial Insurance Solutions. I'm a member of the $1 Million Roundtable, which puts me in the top 1% of financial advisors in the world. I'm also the author of the best-selling book, The Age of Self-Reliance. Last but not least, what I always tell people is my mission in life is to change the economic condition of my community where we are able to do better financial wise, as I feel like everything that we do is connected to money. So that's one of my main my goal in my life mission. And I'm glad you guys are here. We've been around now since 2009 as a company. So thank you again. My name is Jason Matthews.
Hello, everyone. My name is Thandiwe Cato. I'm a financial advisor at Matthews Financial and Insurance Solutions. I have a background in banking and finance, and my vision was really to help individuals and businesses reach their wealth potential. So I definitely saw the need, like Jason said, to be within my community and make sure that when it came to financial planning, I was doing whatever it took to make that wealth gap and continue to have generational wealth within my community. With that said, we want to just tell you a little bit about the history of Juneteenth.
Yeah, so the history of Juneteenth was an announcement that slavery emancipation was officially over. So what happened was after the Civil War, blacks were now free during that period of time, besides in one state, which was in Texas. And then a year or two later, after every Civil War was over, the announcement to the people in Texas that slavery was finally over with. So the slaves, unfortunately, in Texas were still being slaves, even though the Emancipation Proclamation happened and we were free at that point. They were still considered free. So Juneteenth is a day that all blacks and African Americans was considered free in this country.
And to what you're saying, Texas was actually the first state to announce Juneteenth as a holiday in 1979, but it wasn't till it was a national holiday, which just happened recently in 2021. So, we're a little late on that one, but I definitely want to acknowledge the history of this holiday as we kind of talk about, okay, what's happened since then in terms of how we've seen the wealth gap over the last couple of years. So first off, I want to talk about what is the median, or look at the comparisons for the median wealth gap looking at Black and white households. So if we look, this is from 1989 all the way into 2019. So we see that there is, compared to our white counterparts, compared to all households, there's a significant wealth gap in between these households. We're going to talk about why that is and some of the different reasons. And we're also going to talk about solutions and ways we can make that a lot narrower. But one thing that I do want to point out in comparison to even looking at the lines is we see these are lines that are continuing to go up. Even though it kind of goes down in these last couple of years, we see that the line for Blacks has remained relatively steady. So in order to make an increase, I see a lot of people, especially during these last 2-3 years, Black households who have taken initiative to educate themselves more on financial literacy and being more involved in investing in making sure that they have generational wealth within their communities. So I hope within even this presentation, we're able to give some more tips on how we can achieve that over the next few years as well.
Yeah, so when it comes to closing the wealth gaps, there's two ways that we can see how we can close the wealth gap. One is through government side, which means that we put policy in place to close the wealth gap. Well, that could be a big talk we've been hearing about in the community is reparations as a way to do it, or other policies that are designed and designated just towards Black African Americans to close wealth gap. Maybe we have heard forgiveness of student loans. We heard about different programs for housing, but we're looking at government. And then the other arm of it is accountability. What can we do for ourselves to close the wealth gap for ourselves and our family, our business, and our community? And I think, yes, we could rely on, we hope that government does it, but more and more, in my standpoint, in my view, we have to learn how to be accountable for our own personal actions and what we could do, because it takes forever, it feels like, for the government to do anything. Though I know during the last election, we heard reparations, and it seemed like it has died down a lot. So I'm not going to rely on government to take care of my family, to put my family in the best situation possible. I have to be accountable to my own family and my own community to make sure that we're standing, that we're doing the best we can to close the wealth gap for our family. And I think you guys should do the same towards your family as well.
So the first thing I want to start off by saying when we talk about how we start to make a smaller wealth gap is really just the basics, the foundation of what that looks like. And that is like managing expenses. So if you're someone who's like, I don't have any money, I don't know where I'm getting this from, you need to work with what you have. Are you making sure that you're optimizing the amount of money and not just spending them whenever you feel like going out to eat, whenever you feel like, strolling through Target and getting things that you don't need? Really making sure that you're disciplined in having a budget that you follow. I think that's extremely important. So it's not just spending all over the place. If you need to have a specific goal that you're saving towards, that may help you in managing your expenses a little bit better, but you want to make sure that's definitely a priority. Another thing that I want to add to that is a lot of times people are worried about they're not having enough money every month. They're living check to check. Well, what are little things that you can do, even if it's putting, $5, $10 a week towards savings, towards different investments? It's really about, again, managing your expectations and making it a priority. The last thing I'll add on that is managing your debt, because that's a huge thing. If you're paying too much for your credit cards, you're just paying all this debt. You're not necessarily creating anything that's tangible, then you're just going to put yourself in a deeper hole. So you want to make sure that if you do have a lot of debt, you create a plan so that you can start paying that down and increasing your assets as well.
Yeah, and to go back onto what you said, Thandiwe, managing expense, I think now, I know a lot of us got a lot of money during COVID, where people have the PPP, the EIDL, and the unemployment benefits. That money is now ran dry. And now what we're seeing is huge amount of inflation going on, where prices of things are going up. So I think it's more important than ever, we're very disciplined in managing our expenses. Also, when it comes to saving, investing, pay yourself first, or I should say pay yourself second. And the reason I say pay yourself second is the first person you pay is Uncle Sam when you get paid. They take that money out your check very beginning. They don't even trust you. They take your money out your check. But you should do the same thing with yourself. If you have a problem with saving and being disciplined, pay yourself second. Put that money into a vehicle where you cannot touch it. I know one challenge we have where 2/3 of our economy is consumerism is they always want us to buy and purchasing. And so we always have that temptation through advertisement on television, social media. It's everywhere. But one thing we could do is put money set aside where we actually cannot touch it easily. Right now, I know it's easy to go from if you go Wells Fargo app, you could go from checking to savings and go back and forth that way, but put that money somewhere maybe you don't have a credit card to or a bank card to, and you put it down. Right now, as interest rates go up, it's going to affect a lot of people who have a lot of debt that's variable, such as credit cards. As interest rates are going, they're telling you it's going to go up. And so the cost to service that debt is going to go up as well. So we definitely have to consider that in managing those expenses. Better eat some beans and rice, y'all. It's about to get real in America. There ain't nothing wrong with making some pot of beans and rice. I grew up in an old school family, and ain't nothing wrong with making beans and rice. Now, when it comes to building a legacy, there's two components of it. And there's two things we can pass down. One is we have to understand passing down values. Values. What is important? What's important in our lives and in our family lives? What beliefs do we want our family to have? What structure do we want in place? The second thing is we need to make sure that we pass down money and wealth to our family. If you only thing you have is values and that's it, and you have the money, if my stomach is starving, those values are going to go through, or I'm going to break those values and do what I have to do because I'm starving. But if I just give you money alone and that's it, then you're going to do stupid, foolish things. You're going to buy things that are declining, that declines wealth and depreciates. I'm going to overly spend on stupid things. And in a year or two, I won't have anything to do with it. But when you have great values and money put together and they work in tandem, good things happen where our values matches with our money. We can do good things. We can give back to our church, our community, our business. We can build wealth and truly understand what money could do for my family, not just buy flashy things, which is nothing wrong with buying those flashy things, but it's a time and a place for that. But it's really about putting ourselves and our family in a better position where we can reduce health, reduce our, we can increase our wealth. We could reduce the negative outcomes of bad health and everything else that comes along with lack of wealth that comes into place. And the easiest way to pass and build a legacy is through life insurance. The reason why I say that is if you write a check today for life insurance, you can write a check for $50 if you're healthy and you're young, and you can turn that into $1 million legacy for your family. You're trading pennies in for dollars, and that's the power of life insurance. Is the simplest, easiest way to build a legacy and wealth for my family. I could work years and years and years to apply and build up wealth for my family, generating $1 million by working very hard. But at the same time, if I just simply write a check, do a life insurance application, I have turned my family wealth from $0 to eventually being $1, $2, $3, $5, $10 million in a heartbeat.
And I just want to add, because I know you said for young people, if you are older, there are still life insurance options out there for you. You just want to make sure at minimum, if you do, not if, when you pass away, that your family's at least going to have enough money to have you a nice home going, pay for your funeral and burial expenses. Unfortunately, I also want to add part of your legacy is you don't want your family to have to go through the GoFundMe page. Unfortunately, I've seen this way too many times. I know a lot of us who have. And so you want to make sure that is not the reality for your family and that you're able to set them up. If you have more money or you're younger and you're able to make sure that you can pass on more than just your burial expenses, but really to take the next generation to the next level where they'll have enough money for businesses and things like that, that's great. But at the minimum, you just want to make sure that they don't have to go through that process of GoFundMe for the burial expenses as well. So I just wanted to add that.
Yeah, and that's a great point. Really good point that you just made, T.
And so when it comes to really navigating your, that generational wealth, it comes down to what does your family plan look like? And this may be a difficult conversation because a lot of times we think we're an individual, we just got put on this earth, so we don't have those conversations. But it's extremely important to what does it look like as far as a game plan for the next 5, 10, 15 years? Are you and your family actually sitting down and having those conversations? Whether it's, okay, we're planning for, a college fund, whether it's sitting down and saying, like, how much do we need to retire comfortably and have the lifestyle we want? And just those special circumstances or emergencies that come up that we don't even expect or we didn't even plan for. So it's expecting the unexpected and making sure that when those times happen, we're not groveling and looking for, okay, what do I do? Where do I get money from? How do I continue my job if I can't work? Continue my income, even if I'm not able to work at the same capacity. So these are all questions and things that you need to start thinking about. And as a family to have those conversations, because it's very common that people are not adequately prepared financially when these things come up. And you want to just make sure you're in the best position possible in some of those bad situations. So like I said, if you were to lose a loved one, if you lost your job, if you were sick or ill, what would you do? And this is a question for all of you on this call. How would you continue to pay those bills? because they're still coming even after, you've gone through something devastating. And if you're somebody who, is taking care of their parents, what would happen to their assets if they passed away? Do you have the proper estate planning? So these are all conversations that you're having when you discuss your family plan, and making sure all those things are in place. Because I've seen far too many families where there's one person in the family who's taking control of everything, and everyone's just kind of taking a back seat. And they're talking to me about how difficult it is to have a conversation with their family because they don't think it's necessary. So I just wanted to add that part to it.
That's a very great point. A couple of things about family plans we have to understand is this. When you talk about special circumstances, I'm thinking about just even my own family, where I have a 5-year-old who's autistic. And they always say is plan for the worst, pray for the best. And it's a perfect example. I'm not sure if you're going to be able to be self-sufficient or not. So with that being said, my special circumstances with that is I need a plan. Like he's not going to be able to be self-sufficient for his rest of life. So I need to make sure my money, my finances, and everything's in order. So when he gets older, I'm not here, that he is taken care of. We see this, especially in our community, when we talk about homelessness. How many people have mental health issues? But that's because oftentimes they didn't have the family, don't have the resources to take care of them, and they can't have the money for them, and then eventually on the streets because they don't have the right type of care. Also, as a family, we have to understand this. As a community, we all know we go by this investment term of LIFO, last in, first out. And that's the same thing for our jobs. We always know we're the last ones to get hired, first ones to get fired. And if we know that as a community, we have to plan ahead just in case we go through some BS in life, and we got prepared that we deal some BS and we get fired, that we have a plan where our family's not ending up homeless. One thing I see in our community that we do is we have great family reunions, right? We have barbecues, we play dominoes. I'm the biggest domino player in the world, and I whoop your butt in some spades. But during family reunions, we're not having family meetings about the family business. Mama passed away. What do you want to happen to the family house? What do you want? I want to live in it. I want to rent it. I want to do it. What strategies can we do to make everybody happy? I see oftentimes we're doing things without consulting with each other, and then we're fighting, arguing, the family broken up. And if you look at all the wealthy families in the world, they keep everything together. The most famous family like that is the Rockefellers. They keep all that money in the Rockefeller Trust, and that family is still wealthy to this day because they have a family plan. It's not about the individual. It's about the family plan. It's about what we're getting into right now is a period where generational wealth matters. And that's what makes the wealth gap go bigger and bigger and bigger, because the wealth gap, we look at the wealthiest people. Me and Thandiwe is in a book club. We read a book yesterday about Jeff Bezos. Where he get his first 300,000 start Amazon, his family and friends. Where did Bill Gates get his money from? Family. If you look at the lineup of all wealth in these great businesses, it came from family wealth. It doesn't mean everybody's going to be this great entrepreneur person. No. What we're saying is that with family wealth, you can have ordinary jobs and you can build wealth. It's a great joke when we talk about family. When you hear Chris Rock, where he says, I live in New Jersey and I'm the greatest comedian in the world. I think it's Blacker Than Black or Bigger Than Black, one of it. He said Mary J. Blige is the greatest R&B seeker of all time. But my neighbor, he's just a regular old dentist, right? He ain't no fancy dentist in there. And that's, people don't understand that, but he was talking about wealth. And so I think we just have to remember that.
Absolutely. And one thing I wanted to add was I had a client who she told me her and her family actually started to kind of like a binder, and they had a meeting with their family who I can't remember which city it was. It's somewhere in California, but they would all get together and talk about okay, where are the documents located, who has this life insurance policy as a beneficiary, and vice versa. So everyone knows as soon as something happens, this is where all the things are located. So I thought that was very smart to make sure that everyone's on the same page. So if that's something that you're thinking about, it's definitely a way to start implementing those strategies within your family and creating that family plan.
Yeah, no doubt about that. So let's talk about this protection. So even though while we're building money, we have to still protect the money. It's the fundamentals. I always give an example of A couple years ago, it was the Kansas City Chiefs versus the Tampa Bay Buccaneers in the Super Bowl. And everybody was rooting for the Chiefs. The reason being is they had the fastest wide receiver in NFL, Tyreek Hill. They had the best tight end who could run routes with Travis Kelce. They had the greatest quarterback, we're saying right now, of this next generation with Patrick Mahomes. But they lost the game with all that star power. It was sexy, lot of star power. But the reason that they did was Patrick Mahomes couldn't throw the ball to Tyreek Hill. He couldn't pass to Travis Kelce or to any of the other wide or anybody else because he simply didn't have the right protection on the front line because everybody was hurt on this front line. And so he couldn't pass the ball to those stars to make it happen. And the same thing with us. We need to make sure we have the proper amount of protection. So if we're unable to build wealth, we can still go on, because without that foundation, none of this stuff means anything. So the way that we do that is, one, we have to make sure we have proper disability insurance. We all think we're not going to get hurt. We all think we're invincible. What happens if you do get cancer, right? Us African Americans have a huge amount of cancer, diabetes in our family, and it's hereditary. If that causes us not to work, can we still keep the cash coming in, or will we be in a financial burden? Remember, the number one reason people file for bankruptcy in this country, even after Obama with the Healthcare Act, Affordable Care Act, is through healthcare costs and expenses. They said number of women who get breast cancer, I want to say 60% of women who get breast cancer eventually file for bankruptcy because the cost of care and making sure that they can put a roof over their head and food on the table. Also, protection. What is a long-term care plan for your family? If somebody gets sick, who's going to take care of them? Can you take care of them for 24 hours? Do you have the patience to take care of that loved one? Do you need somebody to come here and take a break? Could you afford to even take care of them? And how will it affect you and your wealth down the road when you're ready to retire, but you've been working taking off so many years to take care of mama and grandmama? What is your guys' long-term care? So you need to make sure you have a plan. It's crazy. I'm on the board for Alzheimer's services in the East Bay, and people understand the biggest group have Alzheimer's dementia is Black women. And more we think about it because of high blood pressure and things, high blood pressure and the pills and prescription and how it takes our brain and the oxygen levels that go to our brain possibly. We don't know for sure, but one study has said that. So we need to make sure that we have the proper protection and fundamentals and not be arrogant and think that we're never going to get hurt. I got disability insurance just in case I can't work. I still could put a roof on my head. I could put food on the table. That is my personal responsibility of being the man of my household. And if you're the leader of your household, you have to make sure that you do take care of the family if you're unable to work or not.
And I just want to, one thing is I noticed is I was driving down the street, 2 days ago, and I saw this really nice apartments. And I was like, oh, wow. Like I would definitely live there. And it was actually a nursing home facility. And I think a lot of times when even in speaking about long-term care, people would love to, if something happens to them, go to these really nice facilities. But how can you afford to do that, especially if you don't have enough assets to just pay for it up front, or you don't have kids that are able to pay for it? So if you're thinking about that, or you don't have someone who can afford to pay for it, making sure that you have long-term care insurance, because that is going to be a lot less than if you had to pay out of pocket. Because if you don't have that, you're not going to be at those nice facilities. You're going to be somewhere where it's not comfortable and people are stuffed into, there's too many people in there. And especially during COVID, we saw these homes where people were constantly getting COVID and, not in great situations, is because they were not, at the higher facilities and things like that. Now, you do also have the option to have someone do in-home care and come to your house, but you do have to make sure that is proper planning, and you're not doing that when that happens, you're doing it before it happens.
Yeah. It's fortunate a lot of us are living longer and longer. We don't expect it. Like, unfortunately, this weekend, my wife and my mother-in-law is looking for an assisted living facility for her grandmother. She's 89 years old. She probably didn't think she's going to be 89 years old from back in the day. But the good thing, God blessing her, the good thing was that she got long-term care when she was a state employee, and she'd been retired for over 30 years. She never thought she was going to need it. But more and more, a good thing is it looks like she needed she going to need some type of care and assistance. But we're looking at places without that, it's going to cost $6,000 to $12,000 a month. It is expensive for it. And I'm not sure how many of you guys can afford $6,000 a month, even retirement. I'm not sure. And the problem is if you have to go to a place, you can't do reverse mortgage, because once you live out your house after reverse mortgage, you can't that reverse mortgage debt is now due. So that's another thing to think about.
So now that we've talked about, we've discussed, okay, how do we manage our expenses? How do we, accumulate money and things like that? So we have all these assets, we've had our working career, but how do we now transfer those assets and make sure that we're now in a position to have what I like to call the instructions, right? So let's say, for an example, you have a life insurance policy, you own a home, and you have children, you have grandchildren. What do you want to happen to those assets after you pass away, right? And this is when it comes into the conversation of estate planning, where you have to talk to an attorney and make sure all of these things are updated. Because why did you work so hard over the course of your career, or even like if you own a business, to not be able to pass on those different assets to somebody else? So you want to make sure, like, a huge part of the protection is really the estate planning, because it navigates, you can't live forever. So it navigates how you're able to, create that generational wealth and pass that home on to where it's, part of the family, where your grandkids, your great grandkids are also able to have that in the family. So I think that's an extremely important part. I always mention this when we start talking about a financial plan with clients. I make sure I always add this on the end of it. We don't specifically do estate planning ourselves. We're not attorneys, but we do have resources where we're able to refer that out. But it's definitely a very important part of adding that to your financial plan.
Yeah, no doubt. And I think also with the estate plan, we always think about it just as far as death, but we can actually use it while we're still living. Let's say, God forbid, you had a stroke and you're unable to go to your bank at the time. And you need somebody else to write those checks, pay those bills and expenses. That's part of your estate plan. So just don't think it's always about when you pass away, but what happens if you're living, you get sick, and you need somebody to take care of your financial business obligations when you're not able to. That's what your estate plan is about. Also, updating your beneficiaries is very important. Let's say you go through a divorce. Let's say your life changes. Let's say your kids get older. You want to put your grandkids. All types of situations where oftentimes you see, especially with divorces, where somebody forgets to take off their ex-spouse that they're mad at, and there's new spouse that don't get nothing but their ex-spouse get it. So we just have to understand what's in our estate plan and the benefits of doing it, and doing it properly, and having everything in order.
Absolutely, because you can technically, write your will on a napkin, but you want to make sure that if again, you get what you pay for. So going through the proper steps of actually talking to an attorney, and making sure it's done correctly, like Jason said, is especially important. I've heard too many horror stories of individuals who did not have any estate planning, no will, no trust, and they owned a house. So now, as the family is grieving somebody's death, they now have to go through this probate process of trying to get control of the assets. So you don't want your family to have to go through that as they're grieving. You want to make sure everything's in order. And that's really part of that family plan conversation, where we're taking care of all these different things and having those important but difficult conversations.
I have a great story about what you're talking about for as will writing on a napkin. I remember one of my clients, she was taking care of her aunt. And when her aunt got sick, her mom was taking care of her aunt for years. And her aunt had a will done. And my client, she has a disability, and she has a job, but her job never could pay for where this house was at in Oakland Hills. And so a cousin came out the blue. She never knew, fought and contest the will. And because all the fees that the court charges, and then the judge says, I don't know who to believe, you guys got to split the property. They eventually had to sell the property. First, my client thought she was going to have it. She actually moved in there, and some cousin contested it, and then they eventually sold it. While with another client, when we talk about wealth, their aunt did a great job. She was a sharecropper from Mississippi. And then she moved to San Francisco. And then she was just a housekeeper in San Francisco. She was able to accumulate multiple buildings and apartments in San Francisco just as a housekeeper, right? So when we talk about building wealth, it's not a get rich quick scheme. It's a process. This was a 40, 50-year process. I think a lot of us think everything about getting rich for building wealth. But when she did this, she built all these things. She eventually passes away, and these three sisters inherited the properties. They had a cousin they didn't know about, moved from Chicago to the Bay Area to try to contest the probate. Contest the estate. But because she had a trust done, that cousin moved out here to Chicago with his family for no reason. He didn't get nothing. But you cannot do that. So with the great thing about trust, it is clamped, sealed tight, and you can't contest it. While with a will, it's another but piece of paper. We're going to wrap it, throw it away, and it's wherever the judge says. You want to have full control of your assets. And sometimes in your trust, you might have a will for your healthcare directive is a will, but for the most part, you want to have a good trust where everything is clamped down. You have it exactly as you want.
Why is it always the cousin that you never talk to and you don't even know that will come out of the blue? So if you're thinking, there's somebody you don't like, and if something were to happen to you, you never know what the situation may be where all these people start coming out of the blue. It's kind of like when you become famous, all of a sudden you're so-and-so's cousin and you want to pop up and say that person.
Oh, that's my cousin. That's my cousin. That's my cousin, y'all.
Exactly. All right. Well, we just want to say thank you again for joining us in the middle of the day to hear some more information. We hope this was helpful in just talking about different strategies and ways that we can start to bridge that gap and start creating generational wealth. We don't want this to just be a conversation. If there's anything that did interest you from this presentation, or you'd like to go more in depth and get more information from us, we would love to meet with you, and we're going to share our contact information again. But again, thank you for showing up and really getting this knowledge and this information from Matthews Financial.
Yeah, definitely. And if you guys do have any basic questions you guys want to put in here, go ahead and put them in the chat, as we do have a couple of minutes if you guys want to put any questions in the chat.
Yeah, we have a few minutes for questions. And I just want to know, I know we also have some people from California. We may have some people from out of state. If you could put where you're from in the chat, we'd like to see where you all are located. Okay, I see someone said Atlanta. Okay, what is the best type of insurance? Okay, that's a great question. I'm going to give the answer of it depends. And I'm going to talk about two main types of insurance. So the two main types of insurance are term insurance and cash value insurance. Term insurance is going to be for a specific time period. It's typically cheaper and offers a lot more protection for a lower price. And cash value insurance is more permanent, and you're able to actually use that while you're alive. And that is, something you want to, again, pass on to the next generation and be able to use. That's a good option, but it's typically more pricier. It's more expensive than term insurance, but it does offer a different value. But it's just going to depend on what your objective is. That's the short of it. Jason, you want to add something?
There's a great quote that says, it doesn't matter what type of insurance on the day that you die, as long as you have some life insurance. People don't care what type of insurance it was. They just want to make sure you have the cash when you pass away, for they could take care of those expenses, and we could make sure our kids are taken care of. And so I would say the most important type of insurance, the type of insurance that you have, is the life insurance you have on the day that they die, and you having the proper amount of insurance. Now, how we get there is by talking to one of us to figure out what's the best type of life insurance for you. We can talk to Thandiwe or talk to myself, but figure out what's the best type of insurance for you in your particular situation.
Absolutely. Great question. Do we have any more questions? You can put it in the chat as well. I'm going to stop sharing for a second. All right. Well, we will also send a, oh, I see someone else. And I'll ask this. Where are y'all hiding y'all's money during the recession and inflation? Jason.
I don't hide money because I don't want the IRS after me, first and foremost. But there's some basic places I think you could do to the recession and inflation. I think one thing I tell clients right now is, first and foremost, if you got 10,000 just sitting there somewhere and you're not going to use it for a year, I'm highly recommend people look at doing what they call a I bond. You can get that from the U.S. Treasury Direct, but I think last month it was like giving 8 or 9% for a 1-year Treasury. And the I bond is what they call inflationary bond. I think that's a great way. The max you could put into is $10,000. So that's one thing I would consider. The second thing I tell people is, I know a lot of people got caught up in crypto and all the crypto because it's hot and it was sexy, and NFTs last year, you were seeing taking a big hit. We see tech taking a big hit. What I'm telling people is we're going back to fundamentals. Look at strong companies that have great financials, who have good cash flows, who you know is going to be here for the long term. We're seeing a lot of companies who raised tons of money, but but were what we call a zombie company. I think 20% of S&P 500 companies were zombie companies, and zombie companies are companies that have who have more debt. Who have more debt than the revenue they bring in to pay for that debt. And we see that with a lot of companies. There's like a list of companies that are zombie debt, and we're seeing that a lot of their stock prices are taking a hit because the cost to service debt is happening at this time. Also, another place I tell people I park my money in, I believe in real estate for cash flows. I believe in life insurance, cash value life insurance as well. So it's about being diverse and having a long-term plan. It's not just about 1 year or 2 years. I'm building a long-term plan to build wealth. And that's the most important thing. You want to elaborate on that, T?
No, I think those were really good points. And I would also add that it depends on what your strategy is. I know a lot of people some people are freaking out because, the stock market's going crazy, inflation's rising. You start to see all these things changing, and people are pulling out of the stock market. So start looking at but on the other side of that, I wanted to add, there's some people who are, still chill about it, making money and making moves because, like Jason said, they've diversified their portfolio, and they're also able to hedge some of the things that may be a little bit more risky and have a lot more fluctuation over the past couple of weeks. So just making sure you have someone who can look over your portfolio and it's really in alignment with what your goals are. I would say that would be a big thing in terms of making something that is going to be valuable to you.
Yeah. Another thing I would say is a lot of my clients are close to retirement. I say this, the good thing about rising interest rates, everybody thinks rising interest rates are bad, but they benefit a certain segment of people, which are savers. The reason being is savers now and retirees, especially let's go to retirees. So problem with a lot of retirees were that if you had your money in the stock market and you was giving dividends or just had the money in the bank, those interest rates were so low and you had to take on so much risk to generate the monthly income you need to retire. As interest rates rises is a good thing because savers and retirees don't have to have so much money at risk to generate the income that they need. So one of the benefits I'm seeing for my clients who are near retirement or at retirement is that annuity rates for fixed annuities and fixed index annuities and income annuities have drastically increased during this period of time. So a year or two ago, they might already got 2.5 in a fixed annuity. Now we're looking at 4.5, 5% guaranteed, and that's giving them. Or if they're doing an income period now, they're giving the insurance company less money to generate they're giving the company less money to generate the income they need to cover their basic expenses. So I think this is a great time for savers right now, as they haven't seen increase in interest rates forever. And they've been taking on so much risk over the last 10 to 15, I would say 10 to 15 years, they've been taking on so much risk to generate a retirement income. This is actually helping them out generate some type of increase in retirement income.
Right. Do we have any more questions before we go ahead and close out? All right. Well, thank you again, everybody. If you are interested in contacting us, we will be sending, oh, somebody said contact info. I'll put the screen back up right now. And then we'll also be sending you an email if you registered through Eventbrite. We'll be sending you an email with our contact information. So if you'd like to meet with us one-on-one, we'd be happy to do that with you as well. Anything else you'd like to say, Jason?
No, thank you guys all for coming out this. I hope this kick off you guys Juneteenth. I hope everybody has a good Juneteenth time as we celebrate Juneteenth and the importance of it and how far we have came as a race, as a race and as a country, and how much more progress we need to do to make sure that everything's all right. And the promise of America is guaranteed not just to a few of us, but to all of us.
That was a great ending. I appreciate it. With that said, I'll let everyone get back to their day. We're going to go ahead and close out. Have a good rest of your day, everybody. Thank you.